off with that, but you're kind of a you look at everything tech, and we can ask you about all of it, and we want to do that, about public and private valuations, about streaming. I want to get back to some of your comments on what we need to do with tech, because it's been so good to everybody, to you, to the world. Do we really want to have a heavy-handed approach, government-wise, to what we do? But let's start with public and private. I mean, there's a reason to go public, obviously. It's uncomfortable, and there's more growing pains, but that's still the route most companies want to take eventually.
Yeah, being a public company has a certain cachet. It certainly, if you're a consumer brand, it helps build branding. It gets obviously access to public markets and public capital. It provides liquidity for investors and insiders, and in general, it's still the mark of a successful global company to go public on U.S. markets. I mean,
we're still dealing with WeWork, I guess, aren't we? We're still the overhang. Maybe some of the others that the unprofitable.
Right. I mean, WeWork. Yeah, I'd say if you look back and you look at the IPOs of Uber and Lyft, you know, they kind of struggled to get the valuations that they were looking for, and it made a signal of maybe of a turning point of what public investors were looking for in terms of profitability, or at least an articulated near-term path to profitability. You know, the failed WeWork IPO was a really big milestone and a waking up call, I think, for the whole industry. And what's happened since is, you know, the late stage party has gotten much more sobering and discerning in terms of what companies are getting the kind of valuations and getting the capital that they were getting before. And you had a lot of growth at any price kind of mentality, which you saw kind of in the go-go days of the bubble. And you know, you've seen little pieces of it, and it was starting to kind of come up big. You know, there's a couple of very large investors who are really promoting that thinking, which is, you know, kind of you go big or you go home. And
you mean Masasan?
Well, I mean, yeah, they were one of probably the most public proponents of that. You know, a very strong vision. You know, very go after big markets and try to get share in a winner-take-all type of environment. But that works in certain capital markets, and it doesn't work in others. And I think what happened with WeWork was a little bit of a milestone in terms of what people were kind of looking for.
You think Elliott getting involved with WeWork, with SoftBank, is kind of the signal that, look, this is a new world. We're going to be looking for profits. It's not going to exist like this anymore.
Yeah, you know, I think it is. It's a milestone in that you definitely see that, and it's also, I think, a milestone in terms of kind of activists, you know, getting involved in almost any kind of company, right? And it's almost, you know, it doesn't matter what the size is, doesn't matter what the industry is, and it used to be more. You used to think about it in a more confined basis, and now it's kind of anywhere.
There's a convergence between media and technology. Now, when you were at IBM, did you know you'd have to know about streaming and how to approach the profitability of all these? I mean,
no, I just thought I loved television, because I love television.
Look where we are, though. Yeah. I mean, there's a lot of other. I mean, enterprise software, yes. And, you know, Workday, yeah. All those things. I understand but it just, for some reason, we do focus on the. Even Facebook, all these companies are media companies.
Right.
Really, all the technology is converged. What about streaming? Is that going to be a profitable venture 5 years from now for everyone involved? Is that going to be how we all consume content?
Well, I mean, I think so. You know, when people talk about streaming, they think really about video on demand and subscription video on demand, right? And I think the pay subscription video on demand stuff is what's getting all the attention, and it is really the new generation of pay TV. You know, whether it's what used to be cable or satellite, I think is really migrating to subscription video on demand. But I think there's also going to be an analogy to free over-the-air TV, which is you know, advertising VOD, you know, AVOD, and I think that's going to be a really big space. You know, I think there's going to be a new skinny bundle, which is an inexpensive bundle, which is a great complement to the paid streaming services. and you see people like Roku and Pluto out there they're having good success. Peacock will launch mid next year, and I think you'll see a lot of Amazon will be coming out with something, and I think
Viacom and CBS just saying that they're going to be going with internet-based.
And so I think you're going to see a lot of people that you used to think about. Advertising isn't really dead as a model, because I think a lot of the people who are really interested in millennials and Gen Zs, they've been held. All the consumers have been held in this expensive bundle for a really long time, and people have wanted cheaper a la carte services, and now they're kind of available. I think you'll see, a skinny bundle. It's advertising supported that will be very successful, in addition to the paid bundle that everybody is really focused on and talking about right now.
So who is most at risk of the heavy hand of regulation, do you think, at this point? Facebook, Google. You see all the AGs looking at Google. I mean, who would you worry about? Who are you worried about? And is it going to be a sort of a token look at these companies, and they're going to be allowed to do whatever they want, or is something really going to?
No, I think there will be, and there probably should be regulation. There should be more rules of the road, and some of it is, the media companies are kind of redefining the landscape, and so what you're trying to. They've been self-regulated, but and they're getting criticized for some of the decisions that they're making, because I think they make some of the decisions not really knowing what the ramifications are. And when you're, if you're Facebook, as an example, you've got, maybe the largest global media platform that's existed in history, and you're trying to figure out what the right thing to do is. But you got a lot of people, bad actors out there that are trying to mess with you, and it's just hard. But at the same time, clearly some things haven't worked out, whether it's misinformation or whether it's privacy. Whether it's possible anti-competitive type stuff, and so I think they too are looking, and then they've said this. They're looking for they want to work in cooperation with government in terms of what should be regulations. But I think it's got to happen. I think the companies are looking for it. There's certainly public outcry, and when there's public outcry, the regulators will want to do it. And I think it's a good thing, and there should be more parallels with traditional media companies.
Where are you today?
I'm here.
You are? Okay. Well, we do appreciate you coming on, Geoff. That was very interesting. But where did you say you were today?
I'm playing in Pebble Beach.
You're playing Pebble Beach today? All right. Well, wish you luck. How many?
At least you shook my hand.
Yeah, I did. How...
Yes. There was no snub there, right?
Thank you.
Thank you.
I've been wanting to do that. I mean, was that surreal or not? You ever seen anything?
No, I missed the live one. So
you were